Hi everyone. Today let's talk about UPS. First, I'll go over this article talking about why it went down a little bit this week and why it's still a buy. Then I'll go over the technical analysis and where my price targets are to the up and the downside. Then, of course, I'll talk about my current position in UPS as well as the analysis for the break even at expiration. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this as well as portfolio overviews every single week, so make sure you hit the bell so you don't miss out on any future content. Welcome to the Portfolio Bulletin. Let's get started. So starting off here with the article, they say UPS was down after their investor day, and here's why it's a buy now. They say they met with investors a few days ago and expectations were high, with shares up already 25% in 2021 and 90% over the past 12 months. They released pretty mild expectations in terms of price cutting, projected growth, and share repurchasing, which caused the shares to drop 4.1% and were down 3.5% for the week. But if you have a long-term perspective on the company, it seems like shares can only go higher from here with a 15% year average growth expected for the next couple of years, especially with the PE ratio currently sitting at 17 times earnings, which is a 16% discount from the S&P multiple of 20 times. And it seemed appropriate in the past that UPS trade at a lower multiple based on future growth potential, but with 15% projected growth over the next few years on an annualized basis, it seems like it should be trading at least with the rest of the market at 22 times earnings, presenting a 17% discount for their shares, which are currently trading right around $205. They reiterate that here, saying that shares are trading around 203, a little bit lower than what they're actually trading for. But with that, they project a price target of $290 over the next 2 years, representing around 43% upside to meet that PE ratio along with the projected growth. Moving over to the technical picture on the daily chart, you can see a very strong push moving into that investor day, which was a couple of weeks ago by now. And then this stock pretty much faded off and dipped aggressively after the announcement, all the way back down to around 200 per share, finally settling at right around 195, 196, and since then has bounced back up into the middle of my ATR range, sitting at 205. Had a little bit of a rally here over the last 3 days, along with the broader markets. Looking at the stochastics here, you can see we did have the crossover yesterday, projecting some further upside here, which gives an indication of some future upside. We also had a cross over the 50 mark on the relative strength, again projecting some further upside on the daily chart. So everything here, in my opinion, looks bullish. And of course, we have the trend lines. Short-term trends are down just off of this sell-off, but all of the long-term trends continue to be bullish. Looking at shorter time frames here, you can see the stock is basically settled around this cluster of EMAs. So trading right in the middle of the range right now, with that bounce off of those lower ATR levels, trading pretty close to the upper ATR levels right now. But if you expect this trend to continue over the next 2 years, it's not really that concerning that we're at that upper level for the 4-hour. And like I showed before on the daily chart, we really have plenty of upside potential, even in the short term, all the way up to somewhere around $220 per share. In terms of downward potential, I expect that we'll see some support really around 191 or at the very lowest 182. If we see a break of this 191, I would be a little bit concerned because at that point you have a lot of bearish trends, the stronger trends, even though they are much lower, and then you'll get a death cross, which generally signals lower prices. So for risk, I'm looking at that 89 EMA that's currently at 191.54, an upside potential of 220 right at that top ATR level, which is very similar in price to the previous highs leading into the investor day. Moving over to my specific position, you can see I bought the 195 puts and sold 2 of the 192.50 puts, resulting in a credit of $109. So I have no upside risk here, and if the stock stays right where it's at, or even moves down a little bit, I'll collect that $109. But looking at the P&L graph, you can see that 109 potential profit all the way down to the 195 point. If it goes below there, I'll actually make a little bit more money with a max profit here of around $360 at expiration. And that's because that 195 put starts to go into a profit. And you can see my max profit is actually at that 192.50, and my break even is all the way down here at 188.92, meaning that I'm effectively buying the shares at 188.92 below that 89 EMA. And if I do get assigned or the price really moves down into this area, especially close to expiration, I can start to sell calls to reduce my cost basis. or just roll out these puts in time to reduce my cost basis and wait for the stock to recover, as I do have that long-term price goal, like they mentioned, over the next 2 years around 290. But here in the short term, I expect it to move closer to that 220 level, where the previous high is around 216. Another point to mention is that if it is trading below the S&Ps, you can expect it to be in a smaller bubble than the rest of the market if you do believe the broader market is in a bubble, which presents a little bit less downside risk. Otherwise, comment down below what you think of UPS. Is this a company worth trading to you, or should we just stick to the growth stocks since we know that the Fed is not really going to raise rates for the next couple of years? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future content. Of course, none of this is financial advice. This is all for entertainment value, and have a great day.